Hello friends, in this set of discussions we are going to look at the following. 1. What are tangible assets? Second, what are intangible assets? Essentially, when we talk about intangible assets, there would be a term that will get introduced called as goodwill. And essentially, we'll also introduce ourselves to goodwill accounting. And finally, we'll look at what are long-term investments. So let us analyze, what exactly are these long-term assets all about. Long-term assets are primarily of three types. The first one is the tangible assets. Now, tangible assets are something which you can actually touch by hand. These are physical assets, and an example could be a machinery or a property or a plant. These are all things which you can actually touch and feel. Second long-term asset categorization could be on the basis of natural resources. Now think of those natural resources with which you can capitalize and generate revenues. Think of oil and gas. These are natural resources. Gold fields. These are natural resources. All metal mines. These could be natural resources. So these are also long-term assets. Third is something called an intangible asset. Now, intangible asset is something which you can touch. So, an example could be patents or trademarks. These are or these have monetary values associated with it, but you cannot touch or feel. So, called as tangible asset. One important thing that you need to note about tangible and intangible assets is when we kind of expense this, we call this as a depreciation expense. Expensing over a useful life, we'll call that as depreciation expense in the case of tangible assets. But when we talk about intangible assets, expensing of this expense would be called as amortization. Okay, so here there's a clear difference. Amortization for intangible assets and depreciation for tangible assets. So let us look at the elements of tangible assets in a bit more detail. When you look at tangible assets, you basically buy it to actively use in your core operations, and you expect it to benefit from future periods, and which we call that as property, plant and equipment, also known as PPE, property, plant and equipment. Now there can be two situations. One, you have really bought an asset for use. Now, what happens to the cost associated with buying the assets? The cost could be broking costs. There could be search related costs. There could be costs related to legal elements associated with it. So all the costs, or maybe transportation cost as well. All these costs actually go into the property, plant and equipment arena, and they are not kind of classified separately. So if they're bought for use, all the cost associated with it will go into the property, plant and equipment. Now second thing could be that the property is under construction. So you are creating a property to be used in a future period. So this could be something like an oil field. Now when we talk about oil field, or let's say a refinery, they may take more than 1 year, 2 years or maybe 3 years to complete. Now when we are looking at such kind of under construction asset, there could be cost associated with manpower, electricity supply, legal costs, lot of transportation costs. There could be interest cost as well. Interest cost would mean you have taken a loan and for buying this asset, and you are charged interest on that loan, and the asset is still under construction. It is not yet being used. So this all costs also goes into the property, plant and equipment. So that is why you need to be aware of this fact that there can be two parts. One, you have bought for use, so these are the additional costs should go into the property, plant and equipment. And even if it is under construction cost, all the costs related to constructing this asset like manpower, electricity, transport or interest, all of these will be also go under the property, plant and equipment cost. Let us look at an example of Calpine Corp property, plant and equipment, and this is related to 2004 and 2003 numbers. These are classified into various types: building, machinery and equipment. So this is basically a tangible asset. Oil and gas properties, remember we had discussed natural resources. So these are natural resources. Geothermal properties will be also natural resources. So what we also see is an amount called depreciation, which is directly related to the property, plant and equipment, but there's another term called depletion. So please note that depletion is the word that is used when we are talking about the natural resources. Okay. Now there's another term called construction in progress. So as I was discussing about the property which are under construction, here you will find that these are listed under the construction in progress. These properties are not fully developed. These are not fully developed to result in some kind of benefits in terms of revenues. So classified as construction in progress. So let's take an example here of Calpine Corp. And Calpine Corp has listed a lot of intangible assets. So what we have is the balance sheet amount of 2004 of Calpine Corp. And we note that these intangible assets range from patents to power sales agreement, fuel supplies, geothermal lease rights, steam purchase agreements, etc. One important thing to note here is that there's a mention of weighted average useful life. So this is the useful life which is mentioned here. For example, patents, we mention that it is 5 years is the useful life. So very interesting. Now when it comes to intangibles, we have earlier mentioned that the amount that would get expensed in the income statement will be called as amortization. So when we are talking about intangibles, please note that amortization is the keyword that is used here. So as we have seen earlier, that intangible assets are those assets which are without any physical substance. You cannot touch or feel these, and these are actually acquired for operational use. So as we have discussed earlier, the examples which were related to the intangibles were purchase of let's say patents, trademarks. So these are kind of intangible assets which you cannot touch, but definitely provides you with some exclusive rights or privileges associated with it. What happens when we talk about intangible assets is that it is sometimes very difficult to find the useful life of these patents or trademarks. Patents, however, still will be kind of clear that you may have a 10-year or a 20-year kind of patent, but trademarks and otherwise other sort of intangible assets, useful life may be a bit difficult to kind of determine. One of the intangible assets which is also named as goodwill. We'll look at this goodwill in a moment. However, let's discuss the other intangible assets apart from goodwill so as to take this ahead.